Wholesale price index is most widely used inflation indicator in India. Inflation indicator. This is an inflation indicator. This is published by Office of Economic Advisor, Ministry of Commerce and Industry. Wholesale price index is published by Office of Economic Advisor, Ministry of Commerce and Industry. Wholesale price index captures price movement in a most comprehensive way. It is widely Wholesale price index is widely used by government, banks, industry and business circles. Important monetary and fiscal policy changes are linked to movement, wholesale price index movements. That means it is used by WPI is used by government, banks, industry, business circles. Important monetary and fiscal policy changes are linked to wholesale price index movements. It is in use since 1939 and is being published since 1947 regularly. We are well aware that with the changing times, the economy is to undergo structural changes. Thus, there is a need for revisiting such indices from time to time, and new set of articles and or commodities are required to be included based on current economic scenario. Thus, since 1939, the base year of wholesale price index has been revised on a number of occasions. So, base year has been revised on a number of occasions. The current series of wholesale price index has 2004 to 2005 as the base year. The latest revision of wholesale price index has been done by shifting the base year from 1993 to 94 in 2004 to 5 on the recommendation of the working group set up with the Professor Abhijit Sen, Member Planning Commission as chairman for revision of WPI series. This new series with base year 2004 to 5 has been launched on 14 September 2010. The 676 commodities included in the new WPI having base year 2004 to 5 are divided into three categories: primary goods, fuel and energy, manufactured goods. Primary goods weightage 20.12. It includes 102 commodities. Hi, welcome Priyansi. How are you? Welcome everyone. Fuel and energy weightage 14.91. It includes 19 commodities. Manufactured goods weightage 64.97. It includes 555 commodities. India's wholesale price index does not include services. Earlier, the concept of wholesale price covered the general idea of capturing all transactions carrying out in the domestic market. That means it used to include all transactions which were carried out in a domestic market. It used to cover all the transactions in the domestic market. The weight of the wholesale price index did not correspond to contribution of the goods concerned, either to value added or final use. In order to give this idea a more precise definition, it was decided to define the universe of the wholesale price index as comprising as far as possible all transactions at first point of bulk sale in the domestic market. The major criticism for this index is that the general public does not buy at the wholesale level. Thus, wholesale price index does not give the actual feeling of the amount of pressure borne by the general public. However, the increase in the wholesale prices does affect the retail prices and as such give some feel of the consumer prices. How is wholesale price index calculated? In this method, a set of 676 commodities and their price changes are used for calculation. The method which will use a set of 676 commodities and their prices will be used for calculation. The selected commodities are supposed to represent various strata of the economy and are supposed to give us comprehensive WPI value for the economy. So the commodity would represent various strata of the economy and are supposed to give a comprehensive WPI value for the economy. WPI is calculated on a base year. WPI for the base year is assumed to be 100. For a base year, it is assumed that WPI is 100. Wholesale price index is 100. To show the calculation, let's assume the base year to be 2004 to 5. The data of wholesale price to all the 676 commodities in the base year and the time for which WPI is to be calculated is gathered. Data of 676 commodities, wholesale prices of 676 commodity in the base year, which is considered as 2004 to 5, and the time for which the WPI is to be calculated shall be gathered. Let's calculate WPI for the year 2009 for a particular commodity. Say wheat. Assume that the price of a kilogram of wheat in 2004-5 rupees 10 rupees and in 2009 14 rupees. The wholesale price index of wheat for the year 2009 is price of the wheat in 2009 minus price of the wheat in 2004 to 5 divided by price of the wheat in 2004 to 5 into 100. So 14 is the 2009 price, 10 is the 2004 to 5 price. So 14 minus 10 divided by again 4 to 5 prices, that is 10 into 100, which would be 4 divided by 10 into 100, then 40 would be the answer. Since WPI for the base year is assumed as 100, WPI for 2009, wholesale price index for 2009 will be 100 plus 40 equals to 140. In this way, individual wholesale price index values for the remaining 676 commodities are calculated, and then the weighted average of the individual wholesale price index figures are found to arrive at the overall wholesale price index. Commodities are given weightage depending upon its influence in the economy. So that's all about this video. If you find it useful, like, subscribe my YouTube channel.